Hello and welcome to this edition of Tennessee Concrete Conversations, a podcast from the Tennessee Concrete Association. My name is Alan Sparkman. I'm the Executive Director for the Tennessee Concrete Association. And my guest this morning is Kathryn Thompson with the Thompson Research Group from right here in Nashville, Tennessee. And Kathryn, tell us a little bit about what you do at Thompson Research Group.
Okay. Alan, first off, thanks for including me in this, and it's always been a pleasure working with you guys. So Thompson Research Group, or TRG, is an equity research and advisory firm focused on the construction industrial industry. So anything that's residential, non-res, or public construction, materials, products, process, you name it, we care about it. So we got two different sides of our business. On one side, we're advising large institutional money managers on what public companies to buy or sell. And on the other side, which is a faster growing part of our business, consulting and advisory, we work closely with a lot of different types of companies. It could be private equity to public companies and private companies, and helping them make smart decisions in this space.
Great. And we've had you speak at our convention multiple times. I always appreciate your insight and the expertise that you bring to this whole segment. And you do a lot of work with very recognizable names in the concrete and aggregate construction space.
Yep.
So this morning, I'd like to get your view on what you see for the rest of 2022. We're a little bit past the midpoint of 2022. 2023 is looming. So, what are you seeing? What are your thoughts about the next 6 months and then a little bit further out?
Yep. So this talk is well timed because we are largely through second quarter public company earnings releases. And then on top of that, I just got back from New York the day before yesterday and reminded why I live in Middle Tennessee. But importantly, I got to talk to a lot of very smart investors up there in terms of their thing. And the word that it's the R word that everyone's talking about. Recession. Is it coming? Are we in it already or not? And, I think that it's easy for people who want to just say, let's just have a recession and get it over with. But you have some recency bias. And what I mean by that, people look back to the thing that happened just before, so the Great Recession, and try to apply some of the same metrics to what's happening now, or even the recession before that. But in what we're doing with right now is just totally radically different. In part, it's because of COVID, but in part of it, or because of secular trends that were happening even before COVID. So, against that backdrop, are we in a recession? Probably not in this neck of the woods. But when we look at the three end markets, there definitely is a pause, more so on the residential side, just as you have inflation abate somewhat. We already are seeing it with key raw materials like steel and aluminum. You've certainly seen it with energy, and that will continue to abate. But if you look at the Southeast and the Southwest, Tennessee included, we are benefiting from that influx of population, and that is a multi-decade change. This isn't just people are moving here for COVID, and that's all fine and good. From our perspective, and this is something we've been writing about for a long time, is that if you have to get back to the turn of the last century to see a similar type shift in population. And it was driven by economic forces and social forces. And today, that's kind of the same thing that's happening here. So will there be not as robust growth in certain markets in the near term? Probably, but that's going to be more on the residential side. Commercial still has a lot of runway to go, in part because you're building out like the Oracles of the world, or also importantly, just that commercial construction that follows residential construction. Those are only starting now. And I wouldn't fret about public construction dollars from IIJA being slower to come out, because it's going to help smooth things out. So overall, I'm feeling pretty good about Tennessee. Now, New York, Ohio, Illinois, maybe not so much. They probably will see a more distinct slowdown.
So what we're seeing, certainly here in Tennessee, I agree with your assessment. I think Tennessee is going to be stronger than many other regions. If you look at the kind of the three grand divisions for Tennessee, Middle Tennessee, Nashville's dynamic. All you got to do is walk around and you can see that. We have lots of cranes in the air, and commercial construction is continuing. Mm-hmm. Residential permits through the end of June, according to Market Graphics, a research firm here in Middle Tennessee, were 0.2% off from 2021, which was a record year. Mm-hmm. So we're essentially level. We'll see what happens the rest of the year, but it's not bad news. Mm-hmm. There's a lot of residential construction here. If you go to West Tennessee, you've got this generational project, the Blue Oval project, that is just now starting. Mm-hmm. And I think the impacts of that for all of West Tennessee are going to be significant and ongoing for quite a while. Mm-hmm. That's a huge investment that Ford is making. $5 billion is the number that you hear. And then East Tennessee continues to be maybe not quite as dynamic as Middle Tennessee, but pretty good. Mm-hmm. People are busy. So I think it is a good outlook here in Tennessee. Do you see any clouds on that horizon?
You look at a little bit different market. So Texas, and there's a lot of, the barbecue is different, but the growth trends are not too dissimilar. And we were talking to a concrete contact in the North Texas, Dallas-Fort Worth area. And he had some concerns because of a major home builder developer had tapped the brakes on buying land for development. But, by the same token, we know from our work that this same home builder has been very smart in buying land in the past. So they're not stopping, but they are tapping the brakes. And I think that that's what you're going to see in these markets. You are going to see a little bit of a pause, but it doesn't mean, I wouldn't interpret that as it's dead. Because the reality is, people talk about the shortage in housing in the U.S. Fine, that's true. But for here, it's just like you've got so many people moving here, they have to live somewhere. Like that, that has to happen. So I'm pretty optimistic. All the realtors that we survey are singing the blues just because there's not enough inventory. That's the biggest issue right now.
Yeah, and we're seeing a small increase in inventory here in Nashville, according to some of the things I've seen just in the last week or two. But we're still far below what we might consider a comfortable inventory. Yeah. So, now a house that goes on the market, it may actually be 2 weeks on the market instead of 2 days. But historically, that's still crazy fast. Yeah. So, and new construction is, a lot of that realtor market is existing homes. My members, ready-mix producers, contractors care about new homes because that's what's consuming concrete today. Mm-hmm. And that still looks pretty good. Yeah. And all the things that drive that, as you've talked about, look to continue to be pretty strong here in Tennessee. Yeah.
I think one of the things, if we were to nuance it a little bit more, I'd be remiss not to talk about rates moving up. And although you have seen them step back a little bit, but in the near term, what you may see more of is more renovations than new construction over the next 4 to 6 months. That doesn't mean that new construction won't come, but as you get some rate settling, and once you get rates down to kind of more the 4% type range on a consistent basis, 4 to 4.5, I think it really, the line of sight is, it's not the absolute level, it's just having line of sight of stability of the rates. And once we have some stability in the rates, that's when I think you'll see a pickup in residential new construction.
Right. Let's talk just a minute about DOT construction. You mentioned the Infrastructure Act, which was passed, and it's a significant increase in money that will be available to state DOTs, the largest increase we've seen in a long, long time. And that's just now, in fact, it's probably not even hit markets yet. Mm-hmm. But let's talk a little bit about what you see for public construction and how that might impact overall demand for concrete and construction.
lots of visibility for a long time. That's on the volume side. On the cost side, state DOTs are finally seeing the impact of inflation in the markets. We've had direct conversations with the North Carolina DOT, Georgia, and Florida, and all have echoed that how they are approaching it are in varied ways, but they can't ignore inflation right now. And so what it means is maybe delaying the start of some projects, some larger projects. And so I think that's just a reality you have to deal with. The dollars aren't going away, but they are waiting for some costs to go down. So if you're doing an asphalt overlay project, which is horrible for concrete guys, they may be switching over to concrete because it's going to be more economical. But there is you are seeing an impact, but it's not a cancellation. It's more, let's wait for costs to come down.
Yeah, and the impact of that money, and it does vary a little bit from state to state, but it's based on the numbers I've seen, it's roughly a 20% increase in their annual programs.
Yep.
That's a significant increase. And it's going to translate, even in spite of inflation, we know that the costs have gone up, but it's still going to translate to a net increase in the amount of work that gets done.
Correct.
So That's good news for anybody tied to construction.
Yes.
We've talked a little bit about interest rates. We talked a little bit about inflation. One of the things that I'm seeing as that remains a major concern, it was a concern pre-pandemic. Mm-hmm. And I'm curious how industry companies maybe are looking at this, but one of the big constraints that we have is workforce. Mm-hmm. And that's going to be true for any segment of construction, residential, commercial, public. Workforce is a big issue. So what are you seeing on workforce?
Workforce is affecting everything from restaurants to plants to construction. But I'm going to tell you, of all the different industries we've looked at, parts of the construction industry aren't hit as hard as others, believe it or not. If you're an aggregate producer, mostly, and I'm sure there may be some folks listening in that might strongly disagree, but by and large, aggregate producers have been pretty okay. But largely their workforce worked throughout the pandemic. It's outside. But if you look at others, there's a whole group of workforce that got out in the Great Recession. So there's a gap in skill set from that. So that's on the other end of the spectrum. One thing that we've been pondering here, and it's a little bit more of an existential thing, it's just in America, how do you approach differently services type job? And I would say construction is services, and it's by and large services, whether you're a plant or if you're a driver for a concrete truck. And I think there's just a real reckoning right now. On the flip side, I think some of that would fix itself if job security becomes an issue. And I think you might see a little bit of that as the year comes to a close. Not for all industries, but even if there's an adjacent industry next door and you see some job loss, it makes people think a little bit more about their job. But no fault. I mean, a lot of people want to just say they're lazy and they're doing all this stuff. I don't think it's just that. I just really think that people are kind of beside themselves in a post-COVID world. And so my thinking has changed a little bit on this. I'm being a little bit more philosophical than I had in the past. But I think it's just going to take some time.
Well, and I think part of what you mentioned there, that's a challenge for the construction industry as a whole, all the different segments, is we need to sit down and think again about those, I call them frontline jobs. So it's the people in the trucks of the ready-mix, the ready-mix trucks. It's the people who are placing our product. It's the people at the quarries who are operating the equipment. Those are frontline jobs. And if we don't execute them, nothing happens.
Correct.
But we've always thought of them as easily replaceable. I mean, I think many owners think of them just like, buying a new truck, that they're always available. We can always find them. And I think we're seeing that's not true.
Correct.
And we don't want those great people that are doing those critical functions, we don't want them to migrate, all of them migrate upward or go someplace else. We want them to stay where they're creating value. Mm-hmm. And that's what we need to reimagine, because I don't think we, on the kind of the ownership side, we've not done a good job creating long-term career paths that keep people on the front line.
Yep. Yeah. Now, I mean, this might be getting a little too philosophical for this podcast, but I think that we kind of forget we're an adolescent nation. And I have a teenager in my house right now, so I have a greater appreciation for adolescence. And I sometimes marvel what can actually be done based on the previous day's actions. And because you didn't think it was possible. And I think there's a little bit of just national growing pains in terms of that when it comes to labor and how we as a nation respond to things. So it'll be interesting to see how we respond to it all.
Yes, I think there's hope. I'm not gloom and doom for that, but there's also work to be done for us to make that frontline job truly a career opportunity and attractive over more than just a couple of years.
Yep.
But I think we can. So perhaps that's the topic of a future conversation. Thank you very much for being with us and sharing some insights with our folks. And we appreciate everybody who's listening in. Stay tuned for the next one and have a great day.
Thanks.